going on, everybody? Welcome back to another episode of the Trade for Yourself podcast, where my mission here is still very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure that you please like this. Make sure that you please subscribe. Make sure you hit that notification bell so you can be in the know every single time I drop an episode whenever I go live. I've been going live here lately because, hey, it's 8 o'clock Central Time, 9 o'clock p.m., on the Eastern side of things. But hey, I'm still committed to providing you all value. You know what I'm saying? That's always going to be the mission. And so I'm still here, glad to be here, man. And so it's no secret, y'all. Nvidia just announced a 10 for 1 stock split, okay? A 10 for 1 stock split. The stock that is now trading above $1,000 after hours, everybody, has now announced a 10 for 1 stock split, man. This is crazy, man. This stock will not stop going up. This stock is in the middle of AI. It's technology. Like I talked about a few weeks back. Investing in technology is what we have to do. This stock is fixated firmly in XLK, the ETF I'm buying every single month. And so that's something that we need to understand. And so let's break down the earnings, right? Let's break down the earnings and let's just see what happened. And so Nvidia is saying that they are showing no signs of AI slowdown after over a 400% increase in its data center business. Okay, so Nvidia's historic rally has been driven by its data center business, which grew by a whopping 427% in the latest quarter as companies keep snapping up its artificial intelligence processors. Now, Nvidia is signaling to investors that the customers spending billions of dollars on chips will be able to make money off of AI too. It's a concern that's been swirling around the company because there's only so much cash clients can burn on infrastructure before they need to see some profit. If Nvidia's chips can provide a strong and sustainable return on investment, that suggests the AI boom may have room to run as it moves past the early stages of development and as companies plan for longer term projects. So if we look at NVIDIA's most important clients for its graphics processing units, its GPUs, are the big cloud providers, Amazon Web Services, Microsoft Azure, Google Cloud, and Oracle Cloud. They made up mid 40% of NVIDIA's 22.56 billion in data center sales in the April quarter, the company said. There's also a newer crop of specialized GPU data center startups that buy NVIDIA GPUs, install them in server racks, load them up in data centers, connect them to the internet, and then rent them out to customers by the hour. For example, CoreWeave, a GPU cloud, is currently quoting $4.25 per hour to rent an NVIDIA H100. This kind of server time is essential in large quantities to train a large language model, such as OpenAI's ChatGPT, and it's how many AI developers end up accessing NVIDIA hardware. Now, following NVIDIA's better than expected earnings report on Wednesday, finance chief Colette Crease told investors that cloud providers were seeing an immediate and strong return on investment. She said that if a cloud provider spends $1 on NVIDIA hardware, they can rent it out for $5 over the next 4 years. And that's a pretty good return on investment, if you ask me, if they actually have the ability to do that. Now, Crease also said that newer NVIDIA hardware would have an even stronger return on investment, citing the company's HDX H200 product, which combines 8 GPUs, providing access to Meta's Llama AI model instead of raw access to a cloud computer. That means for every $1 spent on NVIDIA HDX H200 servers at current prices, an API provider serving Llama 3 tokens can generate $7 in revenue over 4 years. Now that's amazing. That is strictly amazing. Now, part of the calculation includes how the chips are utilized, whether they are running 24 hours a day or less frequently. Nvidia CEO Jensen Huang told analysts on the earnings call that OpenAI, Google, Anthropic, and as many as 20,000 generative AI startups are lining up for every GPU the cloud providers can put online. All of the work that's being done at all the cloud service providers are consuming every GPU that's out there, Wong said. Customers are putting a lot of pressure on us to deliver the systems and stand it up as quickly as possible. Wong said that Meta declared its intention to spend billions on 350,000 Nvidia chips, even though the company isn't a cloud provider. Facebook parent Meta will likely have to monetize its investment through its advertising business or by including a chat bot inside its current apps, which it 100% has the ability to do. Meta's cluster of servers is an example of essential infrastructure for AI production, Wong said, or what we refer to as AI factories. Nvidia also surprised analysts by giving an aggressive timeline for its next generation GPU called Blackwell, which will be available in data centers in the physical fourth quarter. Those comments allayed fears of a slowdown as companies wait for its latest technology. The first customers for the new chips include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and Elon Musk. XAI, Wong said. Nvidia shares jumped 6% in extended trading, surpassing $1,000 for the first time. And in addition to announcing earnings, Nvidia announced a 10-for-1 stock split following a 25-fold surge in the company's share price over the past 5 years. This company is continuing to do its thing. This company has a strong balance sheet. It has a strong moat. It has a strong CEO, which is founder led. The technology revolution in terms of what is going on with AI, it is not slowing down. And there are going to be many technology companies that are going to benefit alongside NVIDIA. The one thing that I talk about with my guys at Market Entertainment, shout out to the guys out at Market Entertainment, a rising tide lifts all boats. And that's what you got to understand here. AMD is going to be higher, on tomorrow. We're going to see, Qualcomm is going to be higher on tomorrow. I saw TSM breaking out, right? There's going to be several semiconductors, specifically semiconductors, but also companies that are also adjacent to the semiconductor industry that are going to be higher because of what is going on with Nvidia. Nvidia is doing its thing, and Nvidia is not slowing down at all. Okay, it's not slowing down at all, and y'all already know this. So, if you're new here, you already know what we got to do now. We've got to look at the chart. We've got to pull up the chart, and we got to see what's going on technically, right? Because the chart is very, very important. Now, this is a daily chart of Nvidia. Nvidia has been having an amazing year. Nvidia shares are up 100% this year. Okay. Now we're not even to the halfway point of the year, guys. Nvidia is up 100%. That is what we are talking about in terms of the share price. Like, this is insane what this stock is doing. And the stock is not slowing down, y'all. Like, the stock hit 974 after it reported earnings last time. After it reported earnings last time, the stock hit 974, and we went through that down period in April, and the stock came down to 756.06, and that actually was a pretty good buying opportunity. That was actually a pretty good buying opportunity for the stock, and the stock is continuing to make higher highs and higher lows. The stock is moving up the way that it needs to move. Okay, it's positive, right? The way I see it, y'all, it hit 974. We're gonna be above 1,000. If you're not in the stock, don't try to get in it now. Don't try to get into the stock now. You know what I mean? Because you're gonna have to wait for the stock to pull back. If you want to trade it tomorrow, I don't have a problem with you doing that, but you need to trade it on a pullback. right? Because we got the 974 right here. You need to wait until the stock pulls back. Okay. When the stock pulls back, that's when you can have an opportunity to maneuver and get into the stock and continuing to ride it higher. But the stock might not pull back tomorrow. It's a possibility. We just have to see what is going to happen once the market opens up tomorrow. But Nvidia looks amazing. Right, it looks amazing. The 10-for-1 stock split, that's a good thing too. The first thing I'm gonna say, the reason why that's good is because it makes the options cheaper, right? It makes the options cheaper for the stock. Okay. That's a good thing for people that want to trade it because these premiums are extremely expensive, right? Second thing too is that it makes one share more accessible, but it doesn't make the shares more valuable, right? Doesn't make the shares more valuable. The only thing, and I'm gonna come off screen for this right here. A stock split is only just if you just take Nvidia and you just look at Nvidia as a pie, right? As a $1,000 pie, right? A 10-for-1 stock split or a stock split in general is just splitting that pie up into 10 different pieces. It doesn't change the characteristics of the pie. It doesn't change the type of pie. It doesn't change the flavor of the pie. It doesn't change who made the pie. It doesn't change anything. It just splits it up, right? It just splits it up into those 10 different pieces, okay? It does not make the company more valuable. However, more retail investors will probably buy it because one share is cheaper, and it also makes options contracts cheaper as well. That's pretty much what it does. But the value of the company, that's a whole different type of situation. Now we still don't want to buy this stock when it's just running nuclear. You got to wait till it pulls back some in order to be able to get into it. But we should be looking for opportunities to get into this company, right? Because this is a very, very strong company. We understand what it can do. We understand the power and we understand what it can do from an AI perspective. It is the leader and it is strong, guys. It is very, very strong. And so a 10-for-1 stock split is great. Is great in terms of providing us an opportunity to get one share of it, right? But again, we want to make sure that we be patient and still understand that the value of the company has not changed, even though the stock has split, right? As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like this, please subscribe. Reach out to me in the comments and let me know how you feel about Nvidia. Let me know how you feel about the stock continuing to rise and rise and rise and just not showing any signs of letting up. Look, we're going to be talking more about other stocks, more about Nvidia, more about the market in general as we are continuing to go higher in the bull market. As always, remember, don't pay for it. Trade for it. I'm going to tap in with y'all next week.